Hello everyone, and a warm welcome back to our investment notes. Today we're diving into the very active and dynamic Hong Kong stock market. As we discussed in our last episode, the market was already quite lively and full of movement. However, I recall you asking whether we might see it stabilize around the 23,000 mark by this upcoming Sunday, which will be interesting to observe. Let's explore the factors that could influence this potential stabilization further. My friends who are employed at the airport are already feeling quite overjoyed as they work in logistics and operations there. They mentioned that it seems like the customs and logistics issues might have a glimmer of hope for resolution, so their company immediately called several employees back to work more hours, as they had already successfully handled a substantial amount of cargo in the past, indicating their readiness to manage any upcoming challenges efficiently. They have a lot of containers stuck, right? Are they called containers?
Are they moving luggage?
No, they are indeed managing air freight, correct? Yes, air freight. They mentioned that some flights are delayed and some flights are stuck. Yes, and then they mentioned that the boss indicated they might need additional personnel to return to work, so everyone is generally not unhappy about simply having a basic salary remaining. Today, we can clearly see that the Hong Kong stock market has thoroughly reflected this situation and the sentiments surrounding the workforce's stability and future prospects. Today, the stock market rose significantly by 532 points, and it is currently standing at 23,040. Today, the news primarily discusses the temporary easing of tariffs between China and the US, although this reprieve is only set to last for 90 days. There's still a lot more to discuss. However, this notable 90-day reduction is indeed quite significant in its implications. For example, concerning US tariffs imposed on various Chinese goods, the rate was previously an astonishing 145%, and now, thanks to this adjustment, it has been significantly lowered to a much more manageable 30%. China is also demonstrating its generosity by significantly reducing tariffs on U.S. imports from a staggering 125% down to a more manageable 10%. It is crucial that we closely monitor how the negotiations unfold over the next 90 days to ensure a mutually beneficial arrangement is reached, avoiding a scenario where one side holds a dominant advantage over the other. Additionally, people are increasingly expressing curiosity about the regulations concerning small package goods, particularly those categorized as very small packages. I came across a news report today that mentioned the upcoming reduction in the tariff rate for these small packages, which will decrease significantly from an extraordinarily high 120% to a much more manageable 54%, even if it costs around $100 for every single item. This news has already been announced, so we can openly discuss what we might anticipate seeing in the upcoming 90 days, as well as the specific actions we will take. I have already opened the action chart for everyone to review and examine. Please take a look at it for more details. Take a close look at this V shape, which is aiming for a total of 25,000. However, our firm target is definitely 24,000.
Oh, let me change that quickly. Let's adjust it first. Hold on a moment. I really need to take a short break and adjust it.
Evely, help me adjust it back to 25,000.
So reaching 25,000 is actually a fairly certain outcome, and I would describe my feelings as cautiously optimistic about it. The peak for the first half of the year hasn't materialized yet, which is something we must address. We have to carefully revise and adjust our expectations, right? Additionally, it's worth noting that the Hang Seng Index also hasn't reached its anticipated high during the first half of this year, indicating a need for further analysis.
Recently, several colleagues at the airport mentioned that some friends who typically invest in U.S. stocks have already begun purchasing shares actively.
Investing in stocks begins today. I'm buying. Yes, whether it's about the past or not, that's it. They mentioned beginning purchases.
We've always said that.
Now, let's take notes. Everyone, review your notes. We always talk about the special price period before, right?
No,
I usually prefer to buy ETFs because I don't have much time to actively watch the stocks.
ETFs will decline along with the market when it drops.
Yes, I've got some.
Buying 3QQ is already an exciting experience, right?
I bought the Dow and the S&P. No, the S&P 500 one times. Yes, the S&P 500. Yes. So synchronously, I'm okay. No problem.
So your QQ is 3 times.
So there's no problem. Let's pause for a moment because we just saw Tencent's earnings report. The adjusted profit for the first quarter increased by 22%, and the profit attributable to shareholders, that is the net profit, is 4.78 billion, which is a year-on-year increase of 14% according to non-IFRS standards. The adjusted profit increased by 22%, and the first quarter profit is 613 million. Okay, we will take a moment to check if we have enough time to carefully review it later on.
Sure, let's plan to review it at a later time.
Let's continue our discussion about the market first.
Yes, actually, the overall atmosphere will continue to remain optimistic. However, as we approach these significant levels, you inevitably start to see adjustments occurring, especially near the notable 24,000 mark.
You might encounter some volatility in the market, but let's take a moment to step back and carefully examine the broader economic situation, including whether the tariffs have indeed been implemented and their potential effects.
Additionally, let's remember the key point. Everyone is currently focused on the significant price cuts and the repayment terms, which could greatly influence consumer behavior and overall market stability moving forward.
But if you look at the absolute value, actually, this is what Wei Yu mentioned, I think, and I agree with this point, that the tariffs imposed by the U.S. on China actually exceed 30%. The U.S. and China are currently each other's primary trading partners, making them the most significant among all major trading partners in the world today.
So if you're only talking about small packages, it's actually a big deal. Small packages cost 120% more. 54% remains a significant figure. What are small packages? In addition to sending products to your friends and family, the most crucial aspect is that these e-commerce businesses are actively delivering goods to local community members in your area.
China is heavily reliant on manufacturing and foreign trade, and its primary trading partner is the United States. You can easily imagine that these economic activities will decrease over time. In fact, the trend over the past few years has been increasingly evident, showing that China's manufacturing supply chain is gradually shifting to neighboring countries in the region. This shift is likely influenced by factors such as rising labor costs in China and the search for more favorable business environments.
Although many people assert that Vietnam cannot fully replace China as a manufacturing hub, there are notable distinctions in production. For instance, if you purchase sneakers, particularly high-end brands priced over $2,000, they are likely still produced in China. In contrast, those priced below $1,000 are predominantly manufactured in Vietnam.
For the time being, these sneakers will remain in their current state. But if you take a moment to envision 5 or even 10 years into the future, it's possible that those priced above 2,000 might return to countries with lower tier supply chains for production and manufacturing efficiencies. This situation will mean that China is facing a growing number of serious economic challenges ahead. If the market gradually incorporates pricing adjustments, it will create particularly unfavorable conditions for e-commerce stocks. Manufacturing, economically sensitive, and domestic demand stocks will face significant challenges.
However, we typically don't look that far ahead. In the stock market, we tend to concentrate on a shorter-term view, usually around 3 to 6 months.
For the foreseeable future, specifically for the initial half of the year leading up to the conclusion of June, the overall atmosphere in the market shouldn't be too negative or concerning. You just mentioned e-commerce companies such as JD.com. Does that count? Because of course it absolutely does. JD.com recently released its earnings report, and its adjusted profit for the first quarter saw an increase of approximately 4 or 3%, which is noteworthy. So we can definitely also consider looking at JD.com as a positive example in this context.
Since you just brought it up, have you noticed how significantly its stock price has dropped recently?
Let's take a look.
Yes, their overall revenue is rising significantly, but unfortunately their net profit is declining sharply. It seems that the performance is not doing well overall, particularly in the platinum segment. Indeed, this matter is indeed related to accounting standards, but we will not delve into the specifics. The primary reason for this situation is that they must make necessary adjustments to accommodate their new takeaway business model, which unfortunately has a negative impact on their overall financial statements, leading to less favorable results than they had anticipated or hoped for in their financial performance.
Net profit for this period is 10.9 billion, which is a significant change compared to the same period last year, right?
Yes, it should be the profit from the segments.
I need to check again before we discuss it, so please continue.
Well, to be completely candid, we've never been particularly fond of JD, to put it that way. It's important to note that we've mentioned JD and JD Health on numerous occasions before, not just in reference to JD Group, but also in relation to various aspects of their operations and impact in the market.
Let's concentrate on the JD Group initially and examine what their total revenue is. Do you happen to know how much the total revenue is for the group overall? Let me take a moment to check that information. Sometimes people mistakenly believe that JD has been performing poorly in the market, but if we look closely, their current results actually appear to be decent, and their stock price seems to be holding up well. I wonder if this will positively influence their future outlook.
I would suggest not for now, because if you analyze their performance, is it truly that disappointing?
Not really. It's simply that the overall structure of their performance has not changed significantly, and the negative factors affecting it have persisted without any improvement.
Yes.
Their total revenue is over $300 billion, and I see it's currently $311 billion. Profit, hey, a year-on-year growth of 10.
Net profit.
Hey, let me explain this slowly and clearly. If we analyze it from a business perspective, we shouldn't separate the businesses.
Let's begin by focusing on the net profit figures first.
Or the shareholders' share,
If that's the situation, I should just go ahead and open the financial report. Are you good with that?
Of course, I'm doing great, haha.
But I need to find it because I'm currently...
I always emphasize that when we analyze performance, we should first examine two key numbers, Torah and Bora.
Top line refers to revenue and bottom line refers to net profit.
Does operating profit count?
No, operating profit refers to the figure that is calculated when you subtract the total costs from the total revenue generated by the business. I understand that.
Ha ha ha. No, I'm still carefully studying the detailed financial reports. Let me check it again. The phone screen is a bit small for reading all the numbers clearly.
Look, the total operating revenue amounts to 301.1 billion RMB. I found it right here. I don't care about that comparison. So if you say that the net profit amounts to $12.8 billion, do you fully understand that financial concept? Why do you have that particular concept in mind? Why don't I like it at all?
The difference is too big. Yes, why is the difference so large? You can only get 12.8 billion after doing over 300 billion in business.
After playing cards all night, it's always chicken porridge for dinner, just like every other night.
Isn't that a little bit excessive, don't you think?
This statement pertains to individual preferences and routines. For instance, I personally enjoy having porridge for breakfast and choose not to engage in playing cards. While I do consume porridge in this setting, isn't it true that there seems to be a disconnect between the labor force available and the income levels that people are actually earning?
I'm not entirely sure if it aligns correctly. To match means that it corresponds to the expectations set by the management team.
Hey, it seems that the management is primarily focused on playing the capital market game in order to generate cash flow that aligns with their specific goals. However, for shareholders, this approach might not necessarily be beneficial in the long term. Of course, you might argue that you are earning from the stock price fluctuations and that you aren't concerned with the present situation. But let's take a closer look at the estimated stock price of JD for a more comprehensive understanding. Let's look at JD's stock price. Yes, now it's at 100. This is JD's stock price, right? It's 96.18.
Hey, this chart is a bit poor. Let's see if we have the Hang Seng Index chart.
Yes, I'll open another Hang Seng Index chart to compare. What is it looking at now?
It's currently examining the peak value reached this year, which is 248.
Yes, right here. Yes, it's clearly looking right at 248 now.
If you take a closer look at the S&P 500 index chart, you'll see that this year's performance has shown a notable recovery. In fact, it's not particularly challenging to outperform JD. Personally, I prefer to invest in ETFs because I simply don't have the time to analyze the market extensively, and by doing so, I have already managed to easily surpass JD's performance.
Are you looking at their performance?
Is that really the case? You must assess individual performance directly. But as an investor, it's crucial not to waste your valuable time.
Well, when investing, at least look for something promising or not too slow.
It's important not to keep going back and forth on your decisions. It's ultimately pointless and unproductive. I genuinely believe that it's a significant waste of your valuable time and energy. You might occasionally find yourself in situations that spark excitement and enthusiasm, but the reality is that it's challenging to find investors who can consistently generate profits and make money over the long term. It's essential to focus on more promising opportunities that offer better potential for success.
Yes, they have just released their performance details, so now we can confidently move on to the next steps.
Hey, is it too late to join in? Maybe they just recently announced it and there's still a chance to participate and get involved.
All right, let's take a closer look at the situation. As for JD, their market trend appears to be following this specific path, and at the same time, everyone is eagerly anticipating Alibaba's upcoming performance results.
That's right. With respect to tariffs, is there anything specific we should pay close attention to in this context? Previously, China faced restrictions and did not receive deliveries of Boeing's planes, which may have implications for future trade. Now, they say that Chinese airlines haven't received the new updates, but now they're claiming they actually can accommodate them.
But did Boeing say they would deliver them first?
Hey, not just yet. Boeing, please pay close attention as this news is citing sources that indicate China is allowing domestic airlines to resume receiving deliveries of Boeing planes. But the critical question remains, will they actually deliver?
They are currently queuing up for boarding the planes.
So everyone is patiently waiting for the goods to be released. While you wait for your delicious wontons, you can choose to line up, take a quick trip to the restroom, or if you don't need to step away, simply stay in line and return without cutting in front of others.
But I think he's at the back of the line. Maybe he's holding back the planes until he finishes discussions with the Americans before handing them over. It's a clever tactic. I mean, it's a good strategy.
From a negotiation perspective, everyone involved is carefully assessing the potential benefits. Well, I see Boeing and the U.S. as a collaborative community, a network of shared interests and goals. I don't view this relationship solely from a corporate business angle. So the U.S. is stating, I'm employing strategic negotiation tactics, and I'll return some planes to you in good faith.
But then I think if I were Boeing, I'd say, if you're so capable, do it yourself.
You understand how to do it? I currently have buyers lined up, and I also have other airlines showing interest, so I might as well pass it on to someone else. This situation will not negatively impact my overall profits. So the second point is negotiation. Now, in negotiations, aren't you supposed to be the biggest winner? Aren't you the one who wins and stands firm? Why aren't you standing firm?
Oh, it's not like that at all, but you might really have to take into account the opinions of the citizens.
Otherwise, are there any flights available?
Actually, if not Boeing, what else can we use? Airbus, right? Yeah, Airbus isn't cutting back either.
To put it another way, and to be completely honest, China's international flight routes are not as numerous as one might expect. In fact, there are numerous routes that currently lack any operational flights. Considering this context, will the general public be impacted by these limitations? Perhaps not significantly, because discussions often revolve around tariffs and their implications rather than the availability of flights.
If you're still standing firm, as mentioned, retailers are already in big trouble. Are we talking about the US or China?
The US, yes, the US.
Yes, the retailers in this situation are really struggling because compared to the stronger market in China, they appear to be in a much bigger mess. They are consistently focused on domestic sales, right?
Domestic sales refer to the ability to be self-sufficient in a local market, unless we're discussing major sectors like large technology companies or heavy industries. For instance, if you own a small foot massage shop and find that there is no customer traffic or business activity, what steps do you take to attract more clients and improve your situation?
Well, if the skilled technicians are all busy helping each other with various tasks, how exactly do you manage to make a profit from your services and operations?
Right? So everyone truly needs to think carefully about how to give back to the community. Otherwise, you're just going to decline.
But if you can still operate effectively, then you can certainly keep going, right?
Isn't that so? Right? If there's no new money coming in and no fresh business opportunities, you will eventually have to close down operations permanently. Therefore, do not solely depend on domestic demand or assume that exports will automatically convert into domestic demand. It is essential to actively seek out and establish relationships with additional partners to diversify your options and opportunities.
So China is currently doing this, and besides the US, it hopes to be like this, yes.
Other countries are also actively working on this issue. Yes, that's absolutely correct.
However, at this moment, it remains quite challenging for any other country to effectively replace the United States. The situation is particularly difficult right now, as the global economy rarely experiences a scenario in which the US economy is entirely failing or collapsing. And then in Europe, well, it's quite challenging to navigate the various issues here. Well, some people say, what about emerging markets? What about Russia and Africa? Their economic totals can't really compare to developed countries.
Yes. However, it is now being reported that there could potentially be a dialogue between the United States and President Xi on Saturday, aimed at exploring whether any meaningful discussions will take place with Chairman Xi. I usually hold the position of chief, and then there will be some dialogues. Your script is specifically written for the chief position. I often recall that during my time, he indeed held the chief role. That is the premier, and then the chairman, vice chairman, and so on. Xi Jinping has never been a premier, right? So why do they refer to him as Chairman Xi? Personally, I never addressed him that way. I didn't use that title, and I find it quite annoying. Regardless, as we approach Saturday, everyone is eagerly anticipating whether there will actually be a meaningful dialogue taking place. This potential exchange could lead to significant discussions, and many are curious about what will unfold during this important event. To determine whether there will be any fixed tariffs published for public access, we are currently observing the situation. However, it appears that both parties are beginning to relax their positions somewhat. As Kenny just pointed out, the international gold price remains notably strong, which could influence developments in this matter. So, is it really strong? From my perspective, considering the current gold price, we discussed it during our last conversation, and today it doesn't seem frightening to make a purchase. However, at this moment, the gold price is displaying some noticeable signs of retreat, as it is evident to everyone that it has an inverse relationship with risk. It appears that the circumstances surrounding the ongoing war have started to ease somewhat, leading to this decline.
It initially wasn't about war, it just hadn't escalated to this level yet.
But it seems like Trump might actually go over there to take a closer look at the situation.
If there's a chance for further peace talks in the conflict, it would actually be a negative factor for gold prices.
But still, I remain optimistic about the future of gold prices and am gradually accumulating more over time.
Yes.
But don't allow it to occupy too much space in your portfolio. Perhaps achieving around 10 to 20% is already considered a high level.
Oh, if we're delving into the topic of gold prices, we might as well explore it further, even though we haven't specifically addressed it in this discussion. Beacon, honestly, it's not as complicated as it might seem. Haha, not really. The situation is quite straightforward. In fact, Beacon has actually stabilized around the 100,000 mark these past few weeks, showing a consistent trend without much fluctuation. This stability suggests a level of reliability and confidence in its current status. This position appears to be just right, as we should be approaching the previous high that we experienced earlier. Everyone involved should have some solid plans in place, particularly now that the Russia-Ukraine conflict seems to be easing up a bit, which could potentially lead to more stability and opportunities in the market moving forward. The long-standing tensions with India appear to have significantly lessened recently, and there are promising indications of a gradual easing of tariffs that had previously strained the relationship. This shift may open the door for improved trade relations and cooperation between the two nations moving forward, fostering a more positive diplomatic atmosphere overall.
So people might not invest in gold anymore.
Now, if you assert that your assumption is that during periods of elevated risks, individuals will forsake gold and instead shift their investments toward Bitcoin.
I'm not entirely sure if that relationship is truly as close as it seems to be.
This situation might require some thorough academic research to fully understand, but there are instances when Bitcoin can serve effectively as both a hedge against inflation and an alternative reserve asset for investors. In these particular scenarios, individuals and institutions might turn to Bitcoin to protect their wealth or diversify their portfolios, especially during times of economic uncertainty or instability in traditional financial markets. At times, the market seems to consider a wide range of factors, and I believe that over the long term, it behaves similarly to gold, functioning as a type of asset that gradually accumulates value over time, making it a reliable investment option. So I'm a bit worried about doing the show with Quincy because our views align and there's not much to discuss. What should we do? You still have to fill an hour. Let's play some music instead. Ha ha ha.
Yeah, let's play some of my classic songs.
Right. Let's look at it from a technical perspective. Or perhaps it would be more beneficial to discuss the conclusion first. During the first half of the year, the BDC experienced a significant breakthrough, particularly in its performance against the USD, as I believe there remains a possibility for the USD to weaken slightly in the near future. Given that context and background information, I still believe there's a significant chance for BDC to reach impressive new highs during the first half of this year. So it needs to break through 110,000.
Once it breaks 110,000, it will quickly continue to soar, just like last time.
Will it soar high? I'm not entirely sure. Typically, it will fluctuate after it confirms.
Yeah, because I distinctly remember the last time it was around 70,000 for quite a while.
Everyone can clearly observe that once Bitcoin begins to soar, it rapidly reaches an impressive milestone of 100,000, which notably occurred within just a few days, right? After hitting this significant mark, it stabilized at 100,000 and subsequently continued to fluctuate. Therefore, if you're interested in this exciting market, be sure to keep a close eye on Bitcoin's movements and trends. However, if we shift our discussion to gold, I can quickly pull up the relevant chart for us to examine together. Currently, gold futures are priced at 3,230, and we're beginning to observe some noticeable signs of softening in the market trends.
Wow, this is Miko, but yeah, I apologize for any confusion.
No, this package is fine. It's just easier to enter.
Hey, I really can't afford to buy such a large piece of gold right now.
Typically, the synchronization of gold prices is quite high, given that it's a product heavily traded by numerous investors in the market.
If I remember correctly, we do have a mini contract in place, right?
Yes, we should have it. We have mini contracts, and of course we have large positions too. Yes. If you say we can hold on, of course we can. So if that's the case, but right now it's actually at a high level.
Playing with gold as a standalone investment might be better in certain circumstances, but when it comes to futures trading, I believe that for short-term trading strategies, there's a possibility it could decline back to approximately the 3,200 mark. If I'm truly considering selling my gold holdings, perhaps I could look to sell at around 3,100. What exactly does that level signify in the current market context?
Is it the 10-day average?
20-day average.
This is the 20-day moving average.
20-day average.
If it returns to these levels, then we can consider whether to take a loss or make a profit. Is that okay?
Okay, let's do it.
Keep an eye on the 30, 100, and 20-day moving average levels.
So besides investing in gold, what are some other potential investment options to consider? Hey, what do you think about the new IPOs coming up? Are you interested in exploring TATL specifically? I personally haven't looked into it, but many of us are starting to invest now.
Let's start drawing. It appears we still have this opportunity because just now we managed to get some quotas back. Everyone needs to draw as quickly as possible to take advantage of it.
Application deadline is due tomorrow.
Yes, but many companies have already folded early due to unforeseen challenges and market pressures. The question remains, when will we fold? In fact, we were supposed to fold already, but after discussing it again, we decided to hold off. However, since we need to secure funds to borrow once more, we must act quickly and make decisions soon. If we are unable to leverage our current situation effectively, the deadline will inevitably be May 15th, and we will face difficult consequences.
Sorry, it's May 15 that we will fold. The first day of subscription has already seen a lot of people buying.
This time we are issuing 118 million H shares with 7.5% allocated for public sale in Hong Kong. The offer price per share is not more than $263, raising $31 billion. The entry fee is $26,000.
Approximately 26,000. Yes, that's correct. How do you perceive this situation? If everyone is indeed interested, can we participate in the dark market activities?
We can still participate in the dark market if you're interested.
Some individuals are not comfortable allowing their money to sit idle without generating returns, so they choose to invest or draw from other resources. If you are unable to draw, or if you would like to assess whether this particular opportunity is truly worth investing in, there is an important concern regarding the potential impact of the evolving relationship between China and the US on this investment's viability and future performance. This geopolitical dynamic could significantly influence market outcomes and investor confidence.
It will definitely matter in the long run. But its market share is not small. The key is whether you can find alternatives. Yes, it's not that easy given its scale.
China continues to maintain, particularly in the electric vehicle EV sector, and in all industries reliant on lithium batteries, the most comprehensive and integrated supply chain. Additionally, it is quite challenging to find alternatives or substitutes for this established network. If you search for electric vehicles, you'll find that mid to high-end models typically do not utilize TATL batteries. Even many mid-range options are increasingly using them now.
Hey, but it seems that your rough lower-tier evaluations are primarily based on the performance and reputation of TATL in the market. With such a large battery for electric vehicles, you also have other products using lithium batteries, which actually rely on the Chinese supply chain, though they may not necessarily use KITL, as your phone doesn't use KITL batteries since they mainly produce automotive batteries.
Yes, in this particular situation, they won't be replaced in the short term, but in the long run, one can clearly see the ongoing trend that the US and other Western countries are actively seeking viable alternatives to the reliance on the Chinese supply chain for their manufacturing needs.
Actually, what other viable alternatives can the US explore in terms of battery technologies?
South Korea and Japan also have a relatively advanced position in the battery industry. So several mid to high-end electric vehicles currently utilize batteries sourced from those two countries, and it appears that Germany also incorporates certain batteries from Korea, primarily produced by LG Chem, which is known for its advanced battery technology.
Yes, they are among the leading companies in the industry, and also Panasonic, which we mentioned, Sony. They possess a relatively advanced level of battery manufacturing technology, but when you analyze the metrics, CATL remains the undeniable leader in the industry.
So if I were to ask you today, would you still choose to invest in this stock? I believe you would still take the time to consider it carefully.
New stocks are influenced by supply and demand.
Upon examining the heat, it indeed appears to possess some potential investment value. Yes, and also,
how many stocks do you typically have in a given year? The figure is over 30 billion, which may sound like a lot, but in reality, it's not that many compared to the overall market. Additionally, this represents a secondary listing, and in Hong Kong, 8 shares also exceed 30 billion. Given that such large new stock offerings are relatively uncommon, I believe that it is definitely worth considering an investment in these opportunities. They mentioned that approximately 300 billion with 9% allocated specifically for the initial and secondary phases of this air compressor project. However, it's important to note that ultimately, as a Chinese company, establishing some manufacturing facilities in Europe does not exempt you from facing certain sanctions that may be imposed due to geopolitical factors. Thus, the business landscape remains complex and challenging. European countries, including the United Kingdom, have decided not to impose excessively strict sanctions on China's battery production or their associated supply chains, aiming to maintain a balanced economic relationship. However, the US will still maintain some specific restrictions in place. For the US, well, imposing limitations on you doesn't mean much. It primarily impacts Tesla significantly. In fact, the United States isn't considered a very popular market for a wide range of various products and consumer goods.
Speaking of electric vehicles, you know that the Nvidia company has unfortunately gone bankrupt, right? It's quite a significant development in the industry. It just made the news. They expressed that they have exhausted their funds and can no longer continue. You pointed out that certain electric vehicle manufacturers are facing significant financial difficulties, and in the domestic market, there is intense competition among various brands. In the competitive landscape, it's truly survival of the fittest. The weaker players will inevitably be eliminated. Nvidia stands out as a prime example of this reality. I just came across the exciting news that Xiaopeng Motors has officially announced their plans to enter the Italian market. This move will make them one of the very first Chinese automotive companies to showcase their vehicles at the prestigious Milan Design Week, an event renowned for celebrating innovative design and cutting-edge technology in the automotive industry. This indicates that Xiaopeng, recognized as a new and innovative force in the competitive landscape of China's electric vehicles, is uniquely positioned as the only manufacturer to have successfully entered the dynamic market of Milan, where their advanced electric cars are now readily available for purchase by consumers. This significant milestone highlights their commitment to expanding their international presence and offering sustainable transportation solutions. They brought the innovative P7 along with the previous model of the flying car, as well as a humanoid robot. What's the big deal about that? What does it mean?
So, it's not just any car. It's it's actually XX2.
Oh, it's a flying car, right?
Why is it a car?
It's like it clearly resembles a traditional clock. How can I best describe its intricate details? It is capable of flying and driving in that manner.
Oh, it's like an airplane.
But actually, you can't drive it without a license. You can't fly it without a pilot's license. I don't know the answer, and even if you could find out, I still don't know what license you might need.
Helicopter license? Not like that. It seems you can't just drive it yourself. It has to be a drone, right? You can't just sit in one and drive it.
So what specific license do you actually need? I mean, do you really need a helicopter pilot license to operate one? And even if you possess a license, it doesn't mean you can simply fly it anywhere. So what about that? Is an aviation regulated?
Yes, regulations exist.
That's right. Yes. That's right. Well, look back.
It's the low altitude economy.
Is it? Isn't it just about ordering takeout? But in reality, it's essentially the same thing. Oh, okay. It seems that their territory has now expanded to encompass nearly the entire southern European market, showcasing significant growth and influence in that region. Previously, they had already entered into more than 10 different European countries. Therefore, if Xiaoxian states that they are now also making an entry into the European market, should we consider which of the three individuals referred to as idiots we should concentrate our attention on, or should we solely focus on Xiaobai?
Focus on the underlying ideals.
Yes, because when considering these new energy vehicles, what specific factors do you really need to look at closely?
Well, you first need to successfully pass the initial hurdle, which determines whether you possess sufficient money and cash flow. Xiaopeng has adequate funds because their reliable business partner is Fuji. If I recall correctly, Fuji holds approximately 8% of the shares. At that particular time, they faced a financial shortfall, which led them to bring in Fuji as an investor, significantly aiding their situation. For Fuji, Xiaopeng represents a vital connection and lifeline in the competitive Chinese market landscape.
Okay, that's the first point you've made. But returning to the topic of Europe, do you find it easy for you to establish a foothold in that market?
I believe that ESNO, when reflecting on the news you've read, appears to be quite impressive and noteworthy. Europeans are increasingly embracing it. To begin with, their design centers are typically located in Europe, which means that the production and development of these electric vehicles are not encountering significant challenges or obstacles. This alignment with European standards and preferences contributes to their growing acceptance in the market. Of course, you will definitely be accepted into the program. However, the true issue at hand is whether electric vehicles are currently as popular or widely accepted in Europe as we might hope. The adoption numbers are still in the early stages of growth, and in reality, when I traveled to Germany, specifically to Frankfurt, which is a major financial hub, I only noticed a handful of electric vehicles in the bustling city center. This observation raises questions about the broader acceptance and integration of EVs in everyday urban life across Europe.
Hey, I noticed the other electric vehicles that were parked along the street.
Certainly. Here's the expanded version. Actually, the automotive landscape primarily revolves around German brands, prominently including Tesla, but there aren't many other notable competitors in that category. On German streets, the majority of vehicles are still powered by gasoline engines, as Germany is regarded as a benchmark for Europe in the automotive industry, firmly established as a car-loving nation. To effectively penetrate this competitive market and achieve a significantly high penetration rate, it will likely take a considerable amount of time and strategic effort.
Now, let's take a closer look at the current trend that we are observing today.
2015, yes.
Why do I believe that L1 could be a suitable and beneficial choice? Like, oh, okay, I see. Hey, Gondorf.
I have a positive opinion of Ideal.
The stock price is currently showing a significantly more favorable trend.
I have a positive opinion of Ideal. It's primarily due to the fact that their products emphasize range-extended motors, which are specifically designed to be more suitable for the domestic market's needs. While we might have the impression that the mainland actively promotes electric vehicles, the focus on range-extended options indicates a different strategy.
They do encourage electric and new energy vehicles, allowing them to overtake in certain aspects, but in reality, many places in the mainland have charging networks that aren't as developed as expected, which affects many consumers.
Some innovative probing hybrids, particularly those available in the European market, are significantly easier to capture and expand their market share.
I have a personal experience that I'd like to share. Recently, while I was thoroughly cleaning my car's interior and exterior, I noticed several stubborn, dirty spots that needed extra attention and care. Suddenly, someone asked me, "Is your car a Tesla?" "It's an electric car."
Oh, I see.
"Hey, I would really like to know, why is it that I can't charge my electric car?" I took a look at his car and thought,
It's a little strange.
"Oh, why does it seem almost like an electric vehicle?"
Then I glanced at his license plate, and to my surprise, it was a bright green plate. The plate bore the distinctive markings of a Hong Kong vehicle, beginning with the letters FV, which clearly indicates that it is a mainland car, officially registered in the mainland region of China.
The reason for the issue is that his charging plug has a different design than the standard one.
This is just a side note. But the main point is, I asked him, if you can't charge your electric car and need to go back to the mainland, what will you do in that situation? He casually replied, oh, I'm not worried, I'll just refuel it.
Oh, in bustling Hong Kong, there are surprisingly very few plug-in hybrid cars on the roads.
Yeah, really very few. And they are not sold much, and Hong Kong also doesn't issue electric vehicle plates. These vehicles can only be classified as petrol cars, which is why they do not enjoy widespread popularity in the market. However, in the mainland, they can still obtain green plates indicating that they qualify as new energy vehicles.
You can enjoy several tax benefits with these vehicles. However, it's important to note that they still require fuel for operation. Such cars are very popular in mainland China.
If the battery is low, refueling is quicker than charging in certain areas, making it a more efficient option.
Exactly. It's convenient for users, and you can also register in various first-tier cities. Traditional blue license plate cars have a harder time getting registered in many first-tier cities. Yes, because there are national policies encouraging new energy vehicles which facilitate these green plate cars. However, at present, in Shenzhen and various other cities throughout China, one can observe that the majority of vehicles on the roads are indeed green plate electric cars. In Shenzhen specifically, there are these so-called 4 major cities, and their extensive charging network is quite convenient for electric vehicle users.
Yes. So, okay, Jason, we will definitely talk about Miniso a bit later. Since we're already discussing cars, I want to shift the conversation to discussing Japanese stocks.
Hey everyone, since we can now see our banner clearly, we can actually start discussing Japanese stocks in detail. So let me ask you this important question. Why is that the case?
I don't know Japanese, but I mean the car manufacturer Nissan, right? They mentioned in their financial report that they lost 6,709 units for the entire year, correct?
I thought they had successfully made a profit after all.
Yes, actually, they currently operate 7 factories around the world, although not all of these facilities are involved in production activities.
Reducing to 10?
Yes, that's right.
Hey, actually, no, we really need to clarify this important point first.
Reduced to 10.
By the year 2027, we will strategically close 7 factories worldwide, effectively reducing the total number of car production plants to a streamlined total of 10.
And then, on a global scale, we will proceed to cut 20,000 jobs. If that's truly the case, I will considerably reduce both production capacity and expenses to adapt. It appears that Nissan doesn't hold the same allure or glamour as it once did, does it? This shift may reflect changing perceptions in the automotive industry.
What's glamorous about Nissan?
Is there any?
Are there any cars?
There is the GTR.
No, and then it seems like the person with the broom is not truly a genuine broom guy, right?
It doesn't matter much, as it appears that the broom guy is effectively considered to be Toyota's major shareholder, which means that while he is not officially one, he operates under their influence. The broom guy essentially represents Toyota, and I happen to hold a 20% stake in this scenario. Yes, indeed, that is typically what is referred to as being classified as a major shareholder in the company. Does that count as being under their umbrella? You know, HSBC's ownership of Hang Seng Bank is still seen as more competitive in the market. Okay, both are recognized brands, but it's often said that Japanese stocks and companies place significant value on lineage and heritage in their business practices. Their supply chain and equity resemble a tree that grows straight up, demonstrating a clear and direct path. A straightforward example of this concept is that if you graduate and secure a job at Japan Airlines, JAL, you would likely never consider seeking employment at All Nippon Airways, ANA, as there is a strong rivalry between the two companies.
Yes. Since it's already established as loyalty, can we confidently say that?
Loyalty, not loyalty, is that the other party won't hire you. Absolutely, because you are the one present in this situation. You are right here with me, understood? If everyone takes the time to watch just half an episode of the tree planting show, they'll realize it's actually quite an old drama, not even a decade old, right? The tree located behind us is indeed from Banka, correct?
So it was misled into opening a factory and cunningly tricked into producing various types of machinery.
This particular machinery factory is intricately linked to a larger wealth group and maintains connections with several smaller manufacturing plants. This arrangement reflects a notable phenomenon of mutual holding rights that exists within the industrial landscape of Japan, where companies often share interests and investments to strengthen their market positions and resource access.
Yes.
This is a bit off topic.
In summary, Nissan is one of those prominent companies alongside its partner Renault.
That's a manufacturing facility located in France. Toyota and Honda belong to a distinct category within the automotive industry. Their supply chains operate independently and do not overlap in significant ways. Notably, Honda's supply chain is particularly self-sufficient and autonomous, allowing for unique operational strategies. I previously mentioned whether Honda might possess some clever century-old tricks similar to those of Nissan and Mitsubishi.
No, there shouldn't be.
Mitsubishi partners with Nissan.
And nothing more after that, that's it?
So why is this particular situation so shocking to the market? Because Honda has consistently prioritized maintaining a highly independent supply chain, they are able to produce their own compact small cars. Everyone says that, of course, they produce their own cars, but in Japan, many K cars frequently share various parts, particularly among certain models. For instance, it is well known that Toyota owns a factory called Daihatsu, which specifically specializes in the production of small vehicles tailored for the Japanese market. These compact cars are indeed supplied to various brands under the Toyota umbrella, including Toyota itself and Subaru, and additionally, the K cars are also manufactured in that location. That's right. Suzuki is highly skilled in this field as well. Sailing is also an expert. However, Honda undertakes all aspects of manufacturing completely by themselves under their own brand.
Honda, that is Honda. Because you continue to speak in Chinese, I have to constantly recognize it, similar to how a logo might also appear in English, you know? Because sometimes when I mention Honda, I accidentally think of the Toyota logo. So, since you're discussing Honda or Conda, it's noteworthy that they recently reported their performance, revealing that their annual profit has dropped by a significant 25%. The total amount received by the shareholders for the year reached 835.8 billion yen, reflecting a notable decrease of 24.5% compared to the previous year. During this specific period, the total sales revenue impressively reached 21.69 trillion, reflecting a notable increase of 6.2% compared to the previous year. Hey, the operating profit has reached 1.21 trillion yen, reflecting a decrease of 12.2%. Additionally, Honda has previously expressed interest in establishing a manufacturing factory in Canada. Now, they have officially announced that the project has been postponed, stating it will be delayed by a significant 2 years. The construction of the ambitious electric vehicle factory in Canada is estimated to incur a substantial cost of around 15 billion SAD. But they are increasingly worried about potential tariffs being imposed on cars imported from the US. There are also numerous unclear political reasons influencing this situation, so temporarily pausing this plan might actually turn out to be a beneficial decision for Honda in the long run. By taking this action, they effectively reduce several unpredictable potential risk factors that could adversely affect the outcomes.
However, if you decide to reduce production at a North American factory, your vehicles will then be manufactured in Japan, and it's important to note that the tariffs applied to Japanese-made cars differ from those imposed on imports entering Canada. Of course, it's not just the Canadian factory. They also have several advanced manufacturing facilities located in the US. Honda's overall contribution to the North American automotive market is indeed significant, as everyone knows. Yes, and another important reason for canceling this plan is that Canada has recently removed subsidies for electric vehicles entirely. I actually think that Honda is quite proactive in expanding its electric vehicle business, demonstrating a stronger commitment than Toyota in this particular aspect. However, it is worth noting that the North American market has historically never been very receptive to electric vehicles, which poses a significant challenge for all manufacturers trying to gain traction in this segment. For the North American market, Honda has consistently been perceived as a more entry-level, progressive, and youthful choice compared to its competitors. This favorable market position allows them to continue to strengthen and solidify their presence among younger consumers and new car buyers. By focusing on innovation and appealing designs, Honda can maintain its reputation and attract a loyal customer base that values both style and practicality. The most direct impact of canceling the factory is that it reduces their capex significantly.
This is a very good thing, as it has a clearly positive effect on their overall cash flow situation.
However, upon looking back at the current trends in the financial market, it becomes evident that HMC's stock performance is somewhat mediocre and lacks the expected momentum that investors had hoped for, indicating a need for further analysis to understand the underlying factors contributing to this stagnation.
In fact, the current valuations of all traditional car stocks are not experiencing any upward movement at the moment. We will have to endure this challenging period for a while, but I remain cautiously optimistic. Honda's overall performance is relatively stable and shows signs of resilience amidst the uncertainty. Yes, I firmly believe that in the long run, Honda will indeed increase its investment in the North American market significantly. They are unlikely to abandon this important market, and in order to successfully sell their vehicles in North America, it is essential for them to establish and operate a manufacturing facility there.
Wow, Evan's significant investment in 7267, which is very similar to Kangda, is impressive.
Yes.
If anyone is genuinely interested in investing in Japanese car stocks, if you're steadily accumulating shares, wouldn't it be a smarter move to consider purchasing some ETFs instead?
Why is that the conclusion?
I'm just asking out of curiosity. I would be inclined to buy because I noticed the stock price is appealing. However, if you genuinely have a strong interest in cars, then it might be worth your time to seriously consider making that investment.
Hey, how many car stocks do you have?
You don't have a significant number of Japanese stocks, do you?
Actually, that's true, so you might as well just...
Hey, didn't you mention Suzuki?
Suzuki, Subaru, the well-known Kangda, and the popular game Dota. But I certainly won't consider buying a Nissan.
Oh yes, that's exactly how it is.
Hey, if Canada won't buy it, how could I go buy it?
Exactly.
Certainly. Here's an expanded version of your text. So, regarding this specific car, we can discuss it to this particular extent. Just now, Jason was eager to ask Ryan about it. And yes, indeed, when I think about it, 9896, is it from Miniso? I haven't come across it before, so I'm curious to learn more about what it is.
9896. Could this be a Japanese stock?
I seem to distinctly recall that 9896 is indeed Miniso store.
Absolutely, that's correct. It's Miniso we're discussing here. They asked, can we make it available for $30? But why did I choose to focus on Miniso? Because I clearly remember that we had an engaging discussion about this particular bubble tea store when it was experiencing significant growth. The success was largely due to their focus on acquiring numerous IP-related products. This is an important trend that everyone should definitely pay attention to moving forward. In fact, this particular Miniso store also offers a variety of these kinds of products, and they invest a significant amount of money to purchase Disney's intellectual properties IPs to attract customers and enhance their merchandise offerings.
Similar to Neja's intellectual property, they have introduced several collaboration items. This is reminiscent of Miniso's earlier days when they first went public and had a particular fondness for such creative partnerships.
It's primarily because their products are very affordable, and nearly everyone is aware that they are well known for effectively imitating popular Japanese styles.
Why do people tend to have a positive impression of them?
I understand, because when I look at one thing, if you are targeting the Chinese market, then you have no moat. What does moat mean? Yes, what do you mean?
What does it mean? If you're cheap, the only way you can compete is by being cheap, then you have no moat. It's easy for others to enter the market.
However, at this moment, there is a particular aspect regarding how he initially began his journey rather than his current status, which provides insight into why you formed a positive impression of the quality and effectiveness of his products.
Initially, when he first launched his venture, I observed that he began purchasing a wide variety of different intellectual property products in significant quantities.
So that's the second story we're discussing, right? You mean that the low prices make you feel positively about him? But what's the logic behind that?
I simply cannot comprehend it at all.
He initially began his business venture with low-priced products, right?
If you truly want to profit or experience significant growth in your business, you need to effectively compete on either price or quality. Theoretically, if you lack strong quality offerings or do not engage in good marketing strategies, you will quickly find yourself outcompeted by others in the market.
However, in this particular situation, I personally don't foresee that occurring. Rather, he continues to expand his ventures and has accumulated excess funds, allowing him to invest in high-priced intellectual properties to develop his smaller-scale products.
Considering this particular aspect, I find myself pondering whether it can indeed be perceived as a positive development. In the past, I noticed prices ranging from $20 to $24, which was relatively early in my experience, and since then, I haven't actively monitored or evaluated Miniso's offerings.
I'm really curious to know, what are your thoughts about Miniso?
I don't particularly favor that business model. They don't have a competitive advantage. Yeah, that's right. You began your company by strategically competing on price, carefully copying or referencing the designs of others, and opening multiple retail stores to increase visibility. You sold products at attractively low prices to draw customers in, and later, you acquired licenses to legally produce and market those successful products, paving the way for further growth and sustainability in the market.
However, when they purchase licenses to produce, the resulting products may lack significant technical content or innovation, affecting their overall quality and value.
The difficulty level is low. Anyone can do it. I mean, you can do it, I can do it. If you have money, you can do it. But some things can't be done just with money. Take Pop Mart, for example. Even with money, they can't do it.
To successfully manage an intellectual property, you must possess the necessary operational capability, and that's precisely where the true value truly resides.
All right, if you want to make a comparison, I wouldn't compare them. I'd compare them to another entity, 2250, which is more similar.
Who do you think they resemble? Apologies, Pop Mart, but the year is now 2250.
Yes, Mini Miniso and Pop Mart are not in the same category because their business models are too different. Yes, the comparison indicates that their business models are quite similar, even though their respective stock prices vary significantly. Certainly. Here's an expanded version of your original text. Of course, there are several factors among them that are not entirely consistent or uniform. For instance, their financial services. What exactly do those entail? I'm not entirely certain how to clearly explain that aspect or provide a detailed description of what they offer. Yes, there are indeed some interferences present, and there are also several gaps that need to be effectively removed.
Yes, the 250B brand was quite popular and well-loved back in the day, but now they seem to be focusing mainly on producing various duck-themed products. Interestingly, in mainland China, they have managed to maintain a certain level of intellectual property value and recognition among consumers.
Yes, at least they are truly and genuinely operating a legitimate IP. But Miniso has never operated an IP. They just bought IPs and then released products like buying Hello Kitty items. So actually it means there's no technical content involved.
Hey there! I just did some research on the name of Miniso. It turns out that the Ye couple owns 6% of the company's shares, and they are already set to receive dividends amounting to an impressive 4.4 billion. This is quite significant, as they are essentially rewarding themselves since they are shareholders. It's important not to feel jealous or envious of their success, right? After all, feelings like envy, jealousy, and hatred can be quite unproductive.
You cannot criticize them unless they genuinely commit significant mistakes, such as engaging in long-term mismanagement or excessively draining company resources. Regarding the chasucheong, they discussed the possibility of creating the next spicy product. This consideration isn't misguided. After all, Miniso is unlikely to produce the next well-known Nabu item.
Miniso's business model fundamentally relies on not creating intellectual property IP themselves. Instead, they strategically acquire existing IP, such as the popular Nabu IP from PopMart, which allows them to produce a diverse range of products including cups, stationery, and bed linens, showcasing their versatility in merchandise.
And they might not create their own intellectual property.
Basically, they don't have it. They will buy blind boxes, but they buy other people's products to make blind boxes. Yep, that's it. So Jason wanted to ask you an important question. If you choose to invest at the price of $30, what specific factors should you take into account? The value has already increased by 30%. You can't simply overlook a one-third gain, right? It's $30 to invest, and it's not only that. He mentioned it needs to be on the 30th, okay? What do you think?
I suspect that I don't fully understand his question. Perhaps he wants to clarify this particular issue.
Or you can clarify it when you think about it, yeah. After discussing this topic in depth, I would like to share some insights about Nvidia. Yesterday, I traveled to Saudi Arabia and met with Wang Renfen. Yes, that's correct. During my visit, in addition to meeting with Chen and Inomax, I also had the opportunity to connect with several other individuals who were present at the event. During their recent visit to the Middle East, officials mentioned that Nvidia plans to supply a substantial total of 18,000 advanced AI chips to Saudi Arabia, marking a significant collaboration in technology and innovation for the region. The very first batch will feature the latest and most advanced model of the innovative Betwell chip. Furthermore, this significant development indicates that the Saudi Consortium Fund is well positioned to construct the world's most advanced AI data center, equipped with cutting-edge technologies. This promising aspect has also contributed to a notable increase in Nvidia's stock prices, reflecting investor confidence in the future potential of AI innovations and related advancements. So, what are your thoughts on this recent news? It actually stimulated a positive reaction in the stock market, causing the stock price to rise significantly by 5.6%. As we previously discussed, Nvidia could be a great buy when its price dips. Has everyone already made their purchases?
There isn't much else available, is there? You really don't have another option, correct? So, does anyone have it yet? I haven't bought it, no need to mention it. It's just an ETF, you can't just buy it when it goes up. You see it rising and then wonder when it will drop back to $100 for you to buy. But when it hits $100, you hesitate to buy. Back to $100, huh? No, it has dropped below that before. Everyone's asking, will it go even lower now?
If I have shares, should I sell them? I believe that stocks should not be traded in such a speculative manner. Instead, it's wise to hold on to quality stocks and have faith in their long-term potential.
The undeniable facts are right in front of you for everyone to see. Some essential things can only be accomplished by them. They can supply it efficiently.
This is the mode. So if you ask me, I prefer to buy these stocks.
I don't like buying stocks that lack a competitive advantage, often referred to as a moat. You always emphasize that no company can easily replace them in their market. Recently, Nvidia has been in the news with some exciting developments. Overall, that's the main point of discussion. Our show is almost coming to an end now, so let's wrap things up.
Not much left on that topic, right? Lastly, I want to check on Hang Seng. Is it number 11? Oh, it's just a rumor circulating right now. It hasn't been officially confirmed yet, but it seems quite likely to happen soon.
Oh, so typically the stock price tends to react positively, right? How does that usually happen?
Today, it's not reacting that way. It's still positively reacting. Look at this.
Hold on, let me verify. It's really overstated.
Yes, today it has indeed broken through the previous resistance level. It's currently sitting at 111. The stock price now boasts a yield of over 6%. However, take note that even HSBC is trading at 90. HSBC is performing well, and its yield is in the range of approximately 6-7%.
Yes, I believe today's closing value is approximately 98 or something close to that.
Some clients have recently reached out to us with inquiries about these specific dividend stocks, asking, hey, should I consider buying these? Is it really okay? I genuinely believe there isn't much of a significant problem. Of course, no one truly wants to witness layoffs occurring in any company, but for some well-established organizations, implementing bold reforms aimed at cutting costs can, in some circumstances, actually be considered a beneficial and necessary step towards sustainability.
Right. Is restructuring the entire framework truly a good idea?
HSBC is restructuring its framework. Well, Heng Sheng hasn't reached that particular step yet. They are currently focused on restructuring their employee expenses for better efficiency. Certainly, here's the expanded version of the original text. So, within your organization, you have a number of long-term employees who may require significantly higher benefits or comprehensive compensation packages due to their tenure and experience. Now, management is evaluating the potential of replacing these individuals with newer, relatively lower-cost options who would demand less in terms of salary and benefits. This strategic shift is advantageous for the company, particularly in the current low-interest rate environment, where reducing cost is crucial for maintaining profitability and financial health. This current background situation is quite positive for local bank stocks, particularly for these well-established banks, and I genuinely believe that it's worth holding on to these investments for the foreseeable future. Yes.
Regarding potential layoffs, the positions that will be affected will mainly encompass senior roles, and essentially the entire organizational structure will undergo a comprehensive restructuring process. However, it is important to note that the cuts could be quite significant, potentially reaching around 50% in some departments.
So, in the world of media, you really must notice this. It's definitely a classic example of clickbait.
So the average is not exactly 50%, but rather falls somewhere between 10 and 50%. So everyone can take a look at the details, and just to inform everyone in advance, next week Chris will come over to join us for a fantastic show, and this time we will have a special 1-hour segment that promises to be entertaining and engaging. If you have any questions or need information regarding Bitcoin or other virtual assets, please feel free to reach out and ask me next week.
I'm the one asking, yes.
So we can happily meet again at the same time next week on this same platform we used today. Thank you all for your support today. See you next week. All right, bye.